On this week's episode of Young Bucks, we have a panel where they are discussing the European Union's digital tax, Facebook's privacy issues going on, as well as Donald Trump's death penalty for drug traffickers announcement. In addition to that, Ben did two segments. One is on the tariff talk, and then the other one is sort of a call out for all the Facebook users that thought their information was actually going to be private. Stay tuned.
Everybody, welcome to the Young Bucks panel. Andrew is out this week. He's tied up with other stuff, and we are doing the big race on the weekend, so we'll be sure to hit you with a lot of extracurricular media in relation to that as well. So stay tuned for that. Today on the panel, we wanted to talk a lot about the tech side of things, especially as it relates to some of the high-flying tech companies like Uber and Facebook. And then we also wanted to hit on some politics because Trump, once again, surprise, surprise, is in the news. So to kick things off, actually, let's start in Europe. Europe, the EU, coming out with a 3% revenue tax. So they're actually taxing revenue, not profits, on digital companies. And this, they say, is a way to get money from tech companies like Google, like Facebook, like Apple, who are domiciled in a different country, so they're paying taxes on the profits in the United States and not paying taxes on the profits in the European Union. So first of all, what do you think about the European Union trying to snatch away money from America? That's number one. And then number two is, what do you think about the idea of a revenue tax in general? Seems like that is kind of counterproductive to what you want businesses generally to do, to make revenue.
I don't think it's that surprising coming off Europe. That seems like a really European thing to do. I mean, they want their fair share, I guess. And I think it seems like that'd be something that would be easy for companies like Facebook to just charge more and recoup that and net out what they were making before.
Yeah, does that not mean that like a Facebook or a Google would just charge more for European countries? Like if you're a European country and you're trying to advertise, you just say, hey, sorry, the EU has kind of screwed you. You're going to pay a higher price.
Right. So, I mean, how does that impact a digital marketer in Germany, for instance, who's trying to compete with a marketer in the U.S. or a Unilever in the U.K. who is now, well, I guess, going to be in Netherlands, actually. So maybe Diageo is a better example, and headquartered in London, who then doesn't have to pay. Google might not actually increase the cost of that by 3%. So Diageo might actually be able to spend more marketing because Google hasn't raised the price by 3%. So it almost seems counterproductive in terms of, while you might be getting a little bit more revenue as a country, you're also hurting the businesses that advertise that are domiciled in your country.
And so, it's just economics 101, right? So taxes, tariffs, stuff like that is just drags on the economy. And so, we've talked a lot about tariffs in the U.S., Trump coming out trying to put tariffs on people. Oh, check it out. Andrew is in the house. But no, so it's just a drag on the economy. We talked about with tariffs in the U.S., what that's going to do. I think right now everyone's trying to play hardball with each other because it's kind of being led by Trump. But I think ideally, as we've talked about with tariffs, is in the end people are like, this is silly. We need free trade, less taxes. Every country, wherever they have a comparative advantage or a competitive advantage, that's what they do.
I agree.
You agree? So that's hitting Facebook. Something else that's hitting Facebook, and I know, Sam, you spent a lot of time on this, is the issue with the privacy. And we have a segment coming up where I kind of blame the users at the end because, I think it's foolish of people to think that their information wasn't being used for commercial purposes. So, Sam, what do you see about this Facebook issue? I know you spent a lot of time on that. Where do you see it going in terms of what are the consequences for Facebook? And then what will this privacy look like in the future? Do you think it changes much?
Yeah, so it's a weird situation for Facebook, and I think Zuckerberg made a mistake after the election. He got way too political. And so now he's being attacked from all sides, from the Republicans and the Democrats. Everyone's blaming him for Trump winning, essentially, even though he's been vocal about not supporting Trump. Facebook's in a weird scenario, though, in that they started a company that gathers information on users to target ads to them. And it's not a new thing in that Google's been doing it for a while, but, how do you regulate that is the big question. And I think that's what a lot of lawmakers are saying right now to prevent essentially Facebook gathering information or other people gathering information that they didn't explicitly want to make public.
Well, that was the whole genesis of Facebook originally. I mean, if you've seen the movie The Social Network, how it actually originated was he essentially pulled profiles and pictures from the Harvard database and made them public. He was taking it private and making it public. So for some reason, he thinks that making everything open and transparent is perfectly good and really necessary. And I don't know why that is, but I think there's just something in his DNA that kind of likes that. What do you think?
I mean, you I think nailed it when you said you're kidding yourself. You didn't think Facebook was taking this information this entire time. Like, I don't know who was under that impression that was the case. I mean, there was a headline that because of that leak or breach, whatever you want to call it, that Facebook is facing $2 trillion in fines. I mean, that's like the most absurd thing I've ever heard. There's no way. If at best they get a slap on the wrist for this whole thing.
Solves our deficit problem.
And yet it cratered their stock price from like 185 to 160 in 2 days. I mean, I think you guys think it's overblown, and I do too, but
it's pretty incredible that one story like this can have such an impact on a stock, but that's what happens.
That's literally like $75 billion in market cap wiped out in those 2 days from that.
That's an expense. I mean, I hope the journalist doesn't get sued because they'd be done pretty quick. So if we move on to, we're going to go a little bit out of order. We're going to hit on Uber right now. So everyone's testing these autonomous cars right now. If you guys live on the East Coast or perhaps in the Northwest, you might not know that, but in Arizona, especially in Phoenix, these tests are going on like crazy. GM's testing cars, Tesla, Google's Waymo, and then Uber is as well. And what happened was one of Uber's vehicles was on a drive and actually hit and killed a pedestrian as she was walking across. Now, she emerged from the shadows. They're saying it wasn't really the car's fault. No one would have seen her. But, I mean, come on. A robotic car killed a pedestrian who was just walking across the street. Now, that's something out of a sci-fi movie. What are your guys' thoughts on that?
So, first of all, I thought like a year ago, approximately, Uber already had this issue. Because I know they started in Pittsburgh testing the autonomous vehicles. And I don't know if it was a wreck or they killed somebody. But I thought that they already had this issue, and they're like, we're halting all autonomous vehicle tests. So I guess they thought they fixed the problem and started back. I don't know, but I don't know if y'all have seen the cars, but at least the original prototype was like a car driving with this huge contraption on top of it that I guess was cameras that were supposed to look around the car at all times to see stuff. And truthfully, like when you look at a Tesla that has the autonomous vehicle, capabilities or whatever, it looks so much cleaner and more crisp that I wonder, just because you put 100 cameras on top of a car, how safe that is, And so it almost seems like my initial thought when I saw the cars was that it was a jerry-rigged vehicle, to try to drive autonomously. Uber's had a bunch of issues, and trying to push into a space that's not developed and be the first ones in there is tough, number one. And then when you say that you're Uber and you're not a Google, like a highly technologically advanced company, I think makes it even more difficult. It'll be interesting to see what Uber does from here.
Krebs, do you think Uber is liable for this death?
Wouldn't they have to be? I'm not nearly as bullish as like what the general person is on autonomous driving. I think it just feels like that's years away. It seems like they have so much more work to do in that entire space. I know everyone's like throwing billions and billions of dollars on it. Like you said, Google, Uber, GM, all these companies, but it just seems like there's so much more work to do to get that to where you're fully autonomous.
And another thing that I think
if it ever gets there, even like it could be one of those things where like everyone's thinking this is the next big thing, and like literally everyone's all in out, and then just like the consumer doesn't do it.
So something I think about is we've all been driving down the interstate before, and a truck has shed a tire. A big semi truck has shed a tire or something, and you have to get over and get around it, or worst case scenario, like you smoke it, but like you don't want to do that. It can damage your car. And I just wonder if like the autonomous vehicles can see that, and the thing is, when I think of autonomous vehicles, I think of there was a game came out called Anki Drive. Do y'all know what that is? So there's these guys that actually made, I think the guys were from Carnegie Mellon. And so it's this track, and it's got like these little vehicles, and you can like control it on your phone and like shoot at each other or whatever. But in the track is code, and so these cars are sitting here reading this code the entire time they're driving around the track. So they know where each car knows where it's at, and it knows where all the other cars are around it. And so when I think of the future of autonomous vehicles, that's what I think of, is you essentially have code in the road or maybe on the side of the road so that all these cars know where each other are at. It's tough for me to imagine a world where you have regular people driving that's completely unpredictable versus you have cars and then you have autonomous vehicles who are kind of assuming that everything's going as planned, when that's not the case in driving. You see wrecks all the time. So it's just tough for me to see a world where we have autonomous and non-autonomous vehicles at the same time on the road.
I feel like for autonomous vehicles, it truly works. Like everything would have to be communicating with everything. Like that car had to communicate with literally everything. Like every smartphone, like everyone. Let's assume everyone has a smartphone. They're communicating with the smartphone to know where that person is, or other cars, or I don't know, street lights, all that type of stuff. Like it's crazy to think about, but
it really is. And what happens if a storm comes and knocks a tree over in the road? I mean, it's just like so many.
That tree's not connected. I'll tell you that.
Yeah, the tree doesn't have a smartphone. We don't know where that tree's at.
Yeah, I think they, it's interesting because I think that no one wants to be last to this party, so everyone's just investing, and it's almost become a little bit of a group thing. Because no one wants to be the stupid company that didn't invest.
If you're like last, like even bottom half, and it does turn into a big thing, like you're literally probably going bankrupt at that point.
Yeah. All right, last topic for today on the politics section is Trump. Surprise, surprise, and he said that he is going to push for the death penalty for the drug pushers, the drug traffickers. Now, he's not pushing for a change in the law, so actually there is the death penalty in existence already for some certain instances of drug traffickers where you're directly involved with a death, and it's premeditated. So, I mean, that kind of falls under the definition of premeditated murder, which is life without parole or the death penalty. So I don't know if there's actually anything new there, but that's the line he's pushing. What are your guys' thoughts on actually pushing for the death penalty for some of these characters?
I really don't know I don't know how likely it is that goes through.
I feel like people getting the death penalty is pretty rare. Like I feel like not many people actually.
And I think
I have no idea what the statistics are on that, but I feel like it's just kind of a rare thing.
Exactly, and even
you're on death row for like 20 years.
Exactly. Yeah, like maybe they'll get the death penalty, and then it's essentially just life in prison.
Yeah,
because no one actually gets executed.
I just think.
So that would suck to say, yeah, I'm on death row. That must be a pretty bad feeling.
It's just interesting. I mean, because I know like the legal system. I'm recalling from like business law when I was in undergrad. They said they had a saying. It's like we'd rather 100 guilty people go free than one innocent person go to jail. And so if that's the case, like and I think our country and our world is drifting into the mindset of like people make mistakes, and that's accurate. People make mistakes. Now, premeditated, if you've been doing this for 20 years, chances are that's not a 20-year mistake. This is something where you've said I can make money and it's worth the risk to do it. But I struggle to see a world where it's like, so like El Chapo, isn't that his name? That's a guy that I think would qualify for it. I don't know how many El Chapos there are out there. So I don't know what the bar is Trump's talking about of like, you're either El Chapo or worse, or is it like, no, he is the worst, and so there's like some level below it? I don't know what that is.
Don't they do this in the Philippines? Isn't the Philippine president institute that?
Philippines, Singapore is huge on it. Singapore, you can't do much without like being eligible for the death penalty. Like, it's crazy. But what I wanted to say was, I mean, on this issue is that I don't think, when you look at the law, it's either a deterrent or a punishment, or it's punitive. So I think we can all agree that the death penalty for most rational people is both. It is both punitive and a deterrent from committing a crime. But as Sam was saying, if you've been doing this for 20 years, you know it's illegal. You know that you shouldn't be doing it by the letter of the law. And you're probably risking your neck way more on a daily basis in terms of death than anything that if you go to
That's a good point.
if you go on death row, you're probably safer than if you're out on the streets.
I was just about to say that, is that like if you go kill somebody, like a lot of I'm serious, but like a lot of
this should be good.
a lot of these like mass shootings or whatever end with the guy killing themselves, and so I almost think that it kind of to Ben's point is, when you get involved in this, I think it's already become assumed in your mind like I'm gonna die by a gunshot, like I'm gonna, like, at the end of this I will die, and not in terms of like the end of life, but like at some point I'm gonna get caught, I'm gonna get busted, and I'm gonna die. And I think that a lot of these guys have already come to terms with that. So I don't know if putting a death penalty on drug lords is something that's gonna deter them.
I'm in full agreement. So, whatever happens, like whatever the law is, it's the law. But in terms of thinking that this is going to solve our drug issue, I don't think it gets close.
Absolutely, yeah.
So that's it for Young Bucks. Stay tuned for the rest of the show, and we'll catch you here next week. Thanks.
What's going on, everybody? Greg Moyer here, joined with Sam Frost and Matt Krebsbach. We're going to do a quick little lightning round on a couple of quick topics, and we're just going to dive right into it. We've already talked about Facebook a lot this episode, but we're going to start it off with Facebook. So just a general question for you guys. Is Facebook kind of as a whole mismanaged? What do you think? Knee-jerk reaction.
My initial thought is no. Facebook's had incredible growth, and they've evolved into more than just a social media company.
I mean, I'm saying no as well. I think it's just super hard to say no. Zuckerberg is mismanaging Facebook, or has mismanaged Facebook. I will say that I think they should have came out and addressed the most recent thing more. They haven't at all. I think they should have done that. But
right.
Overall, no.
It's rumored that he's going to come out today, I think, or in the next day or two.
Yeah.
To talk about. Anyways, leading into that with the whole data breach stuff, do you think in general it's Facebook's responsibility to protect the user's data, or do you think it's more on the users to be careful with what they share?
I think it's both. I think initially it should have been more on the users. I mean, we grew up with your parents saying, don't put anything on the internet that you don't want to be public.
Right.
But as we have evolved into a very internet-centric world, I think Facebook needs to try to do a lot to help protect that data. The issue, and the current issue, is stuff that happened a while ago, from 2007 through 2015 is specifically what's hurting what this current scandal is about. So that's going to be a hard thing for Facebook to overcome, is that I think it is more their fault or their issue now, but it's going to be tough to compensate for what's happened in the past.
I think it's more on the consumer. I just think like there's this, like when you sign up for Facebook, I think it's kind of like you agree to that, like saying, putting all that stuff out there, like you have to operate in the assumption that if you put that out there, the world sees it. Right.
And I guess the follow up I would say is, from 2000, like once they came out in 2015 and they kind of changed their rules on sharing data or whatnot, from then on, now it's more on Facebook. It's still on the consumer a little bit, but it's a little bit more on Facebook now. But they can't be held responsible for, I think, 2007 through 2015.
Right. Good point. So then we've got Uber, we've got Airbus, and also Boeing, all three making a run at these autonomous air taxis, each with different timelines. But I guess they're all thinking aerial taxis, that's where we're headed. Just in general, which one of those companies do you think does that well and succeeds?
or maybe which ones fail? Who does it best out of those three?
So does it best, I would say Boeing or Airbus, hands down. I think it's a crapshoot picking between the two. If I had to choose, I think I'd go with Airbus. Uber, hands down, the least prepared to do anything. They can't even do autonomous vehicles. They're not going to be able to do autonomous flying vehicles.
Right.
Yeah, I think it's just super hard to go against. And like you said, it's super easy to put Uber at the bottom of the list. I think it's harder going against Boeing. I think that's just like has traditionally been the crown jewel of American, industry. Like it's
the only reason
company.
I 100% agree. The only reason I said Airbus was because I think Boeing has the most to lose, so that Airbus would be a little bit more incentivized to take a risk to go down that route.
All right, then we've got Dropbox IPO. I think they're going to start on Friday, trading on the NASDAQ. So they just raised their initial price. I think they raised the range $2. I think it was between $16 and $18 a share, and now it's up to like 18 to 20. And then that valuation went up from 7.2 billion to about 7.85 billion. So what do you guys think? Is that a fair valuation of Dropbox heading into the IPO?
It's probably rich, but I mean, I don't think that they're going to trade down on the IPO because the investment banks are soliciting bids for, who wants these shares. And if they're seeing high demand, then obviously they can raise it. I think traditional valuation perspective, once we gather more information, we might look back and say that was rich, but I don't think they trade down on the IPO date.
Yeah, I'm sure they'll trade up, but I don't think it's going to explode.
Mm-hmm.
I think part of that reason is that I think investors are kind of a little timid because of the recency bias in Snapchat, the performance of Snapchat from their IPO time. After that, run up to the completely crater since then. I mean, they're completely different businesses, but I think for just new tech, good sized tech IPOs, people are going to be more, sanguine about it.
Yeah. But and one last thing though is that for Dropbox, the perfect scenario for them is they go public. I don't know what the share price is they're talking about. Did you say 20?
They said probably between 18 and 20.
18 and $20 a share. For them, I think the perfect IPO is they IPO at, call it $20 a share, and the share price closes at $20 a share because that means they got the absolute maximum out of it.
Mm-hmm. Cool. So speaking of Dropbox and their IPO, we also have Spotify with an IPO, I guess, this year. So share price appreciation in the first year, who wins between Dropbox and Spotify in their first year, respectively?
Yeah, I think I'd have to go with Dropbox. I think it's more enterprise company versus more individuals for Spotify. So a lot more money to spend there. I would go with Dropbox.
That's a tough one. I think that's a great reason, the enterprise side of it, because I mean with Spotify, I think the program's awesome, or the usage is super easy. It's awesome, but you're also going against Apple Music, which is a very difficult endeavor. And I don't know, you swayed me. I was gonna say Spotify, but you swayed me, so I'm going with Dropbox.
Very persuasive. All right, now the Qualcomm NXPI deal, does that get approval in China? That's coming up soon, I believe.
This one's tough.
We've done a lot on this.
Yeah, and with the recent stuff with, Trump blocking Broadcom from buying Qualcomm for national security stuff, I think China might play hardball and they might not say no, but they're at least going to delay it, I feel like. But if I had to say, I'd say that they're not getting approval.
What you got?
I think they are. I just think I think that's a part. I think China's trying to play hardball, and they're trying to kind of closing their borders in terms of technology and try and keep all that in house. So I think on the flip side, they're trying to weaken or keep what they can from the U.S. So I think they're trying to get as many concessions as they possibly can, because they probably know Qualcomm's pretty desperate to get NXP.
Yeah.
I think, and when you see, I mean, Europe gave their approval, what is that, a month now ago?
Yeah, something like
that. They had to give concessions to the EU. I think China's just kind of, making a best deal for themselves and for their national security.
So you think that the deal will go through, but they're going to have concessions?
I think it'll go through, but Qualcomm has to give the same or different concessions or more to China.
Yeah, that's a good point. Can Qualcomm break that off if they don't like the concessions, or is there a big breakup fee?
There's a breakup fee. I think it's $2 billion or something.
Gotcha.
I don't remember specifically.
It's a lot of money.
It's a lot. All right, now March Madness. I think a lot of brackets got busted around here pretty quick. But now we're in what? We're in the Sweet 16 now?
Yep.
I believe. So what do you guys think based on teams that you've picked that have gotten beaten or are out now? What's your new pick to win? Has it changed at all? Do you have a new Final Four? What's that looking like?
So new Final Four for me. 2 of them are my original picks, Villanova and Kansas. My other 2 are out, which was Virginia and UNC. I would replace those with Kentucky and Michigan. I think Villanova is still my winner.
There you go.
I know I'll have Villanova. I'll have Duke. I don't like Gonzaga. I think I like Michigan, Kentucky. I think Kentucky's got a pretty easy path there.
Mm-hmm.
I think when you get, I mean, I said this about Arizona, but when you have talent like that playing well, you can go really far.
Yeah.
I think Michigan they've been really well. They've played really well in the tournament recently. I think that's a pretty solid pick.
That's part of my analysis for Gonzaga is that they have not skated by the first 2 rounds like they should have. And so I think I do believe in that it is difficult for teams to just flip a switch.
Mm-hmm.
And so they've had a day or 2 off, I guess. So they might be able to turn things around, but I think it's a tough.
So you and I are just different on Kansas and Duke, right?
Yeah.
Yeah.
Cool. All right. Last question to round it out. Heisman picks. All right. So we've got Jonathan Taylor, J.K. Dobbins, Tua, the guy from Alabama. I'm not going to try to say his name. And Bryce Love. What are you guys thinking? Get a power ranking going or just an outright winner? What do you think?
So
those, according to betting odds, those are the top 4 most likely. Right now.
And so I think I would go with Jonathan Taylor from Wisconsin.
Nice.
Has the opportunity to have like the best statistics. And simply this is kind of building off of what we talked about with Wisconsin a lot last year in that they didn't have a difficult schedule. And I don't know that it's going to get much more difficult this year.
It is much more difficult this
year.
It
is much more difficult.
I mean, you can only go one way compared to last year. Like that,
yeah,
that's schedule's an absolute joke, but it is actually a decently hard schedule.
But so I think he's got an opportunity to put up some monster numbers. The issue I have is that I think a lot of times there's a bias towards the best player on the best team versus just the best player in the country. So for that reason, I'm actually going to go with J.K. Dobbins from Ohio State as the Heisman winner. I think Tua, I don't think he's going to get enough reps. I think there's
I don't know if his numbers are going to be good enough to do it.
Yeah.
Kind of like Jalen Hurts. Like he had great numbers, he just didn't. Half time he was sitting in the second half, you know.
Yeah, and I don't know that Tua is going to be the starting quarterback. There was a reason that Jalen Hurts started last year over him all season. So I don't know that that's clear that he'll be the starter.
Yeah, that's a tough one for me because I mean Bryce Love's a really good running back too, and it's kind of like a similar situation with Wisconsin where it's a running focused offense. He's gonna get a ton of reps. He's probably gonna win the Pac-12 or at least be maybe behind USC, you know. But I mean, I can't go against my home state, Jonathan Taylor. So I'm going Jonathan Taylor.
All right, cool. Thanks for joining us. We've got Ben coming up talking about tariffs and also doing a call out on Facebook. So stay tuned. Thanks for watching.
Hey, everybody. Tariffs have been in the news a lot lately, and this is because Trump has proposed new tariffs on steel and aluminum. Specifically, he's proposed about 25% tariffs on steel and about 10% tariffs on aluminum. So I wanted today to talk a little bit about the history of tariffs and where we stand today in terms of the tariff structure on the world scale. So just leading off about the history. For many, many decades, many centuries, we operated under this mercantilist system where countries would do well and they would pad their own finances because they would charge tariffs on imports. This worked for many, many years. And then gradually, as we approached the 20th century in the early 1900s, we started to do away with the tariffs and instead switched to how do we raise revenue at that time? We decided to institute an income tax. So the income tax has actually not been around all that long. It's been around since about the 1910s. After Woodrow Wilson and that administration passed the constitutional amendment for it. So, but before that, we had always had tariffs, and tariffs gradually faded out over time as we moved more toward these free trade agreements, and we realized the benefits of what they call comparative advantages. And that is, we want to take advantage of the fact that a country can do something cheaper than we can do it at home. For example, if we were to produce all of our own coffee, it would be extremely expensive because we just don't have the climate for it. So for that reason, we like to import it. If we want to produce all of our own steel, that would be expensive as well because we don't have the manufacturing facilities in place. We'd have to build them, and that would cost a lot of money. So we like to import because it can lower our cost in general and improve the efficiency of the global economy. That's kind of the history of tariffs. But again, before the 20th century, the United States really made all of its money because of tariffs, and then because of it was exporting as well. So that was a big shift that happened during the 20th century. Currently, the U.S. has really progressed into more of a free trading narrative. So we have many free trade agreements, and we have very low tariffs relative to the rest of the world. In contrast to what many people think, the rest of the world actually has extraordinarily high tariffs relative to us. For instance, on the latest set of tariffs, which had a 25% on steel and 10% on aluminum that has been proposed by the United States, I think that a lot of people are missing that the European Union just renewed the tariffs on Chinese steel that were between 48% and 72%. So in relation to the European Union, our tariffs is still about half of what those are on Chinese steel. So that's number one. And number two is I just wanted to look at a number of the tariff structures. If we look at an average tariff rate across our various trading partners, we can kind of get a sense of the comparison. So for example, on minerals and metals, which steel would probably fall under, China has an average of a 7.8% tariff. The United States has a 1.7% tariff. If we look at manufactured goods, China is at 12.1%, the United States is at 2.4%. If we look at non-electrical machinery, China is at 8.2%, United States is at 1.2%. And this is on average. So it's not, so there are sometimes they have this thing called most favored nation status, which gives one country a better tariff rate than another country. But on an average, including bringing down the average with the most favored nation trading partner, the United States has much lower tariffs in general. Even compared to Mexico, on manufactured goods, tariffs are 5.1% in Mexico versus 2.4% in the United States. And then on minerals and metals, Mexico's at 2.8%, the United States is at 1.7%. So on a whole host of issues, the United States has one of the more friendly tariff structures. We're leading from the front. We're saying this is what we want to see, and we're hoping the rest of the world comes with us. The problem is that hasn't really been the case. A lot of the world has not come along with us, as you see from those statistics. So what we've proposed is these new tariffs so that when we import other people's steel, we charge them a tariff. So they can't just build all this capacity and then dump it to the rest of the world. They make some money, and all of our businesses which are unsubsidized, can't compete with those businesses that are subsidized. So what we've done, we've implemented 25% tariffs on steel, 10% tariffs on aluminum. Wilbur Ross, the Secretary of Commerce, who have actually talked about in an unfavorable light with respect to Bombardier on this same show, he came out and went on CNBC and had a can of Campbell's soup out of Coca-Cola. So I'm just going to recreate that right now. He claims that there is 2.6 cents of steel in this can of Campbell's soup. With a 25% tariff, that cost goes up by 25% or by 0.6 cents. So de minimis amount. Even if Coca-Cola charges a margin on that, you're talking about 1.5 cents on a can of Campbell's soup. can of Coca-Cola, 3 cents of aluminum in this product, 10% tariff. That means it would go up. The cost for a can of Coca-Cola would go up by 0.3 cents. Again, charge a margin on that, and you're talking about 1 penny for a can of Coca-Cola as a result of these tariffs. So in terms of the actual impact, I don't think people are really going to be making purchasing decisions based off of a 1 cent increase in a can of Coca-Cola. So that's some of the history of the tariffs. That's what has been proposed, and that's what we're going to be watching going forward. But in terms of really getting worked up about it, don't count me among them. Thanks. Hi, I'm Ben Nye. Welcome to the Call Out. Today we're talking about Facebook. And Facebook has been in the news a lot over the last week since the story surfaced that Cambridge Analytica had used data mined from Facebook in order to further its commercial endeavors and perhaps consult on things like the Brexit vote and the Trump election, and perhaps even sway the ultimate outcomes of those events. So Facebook's catching a lot of heat on this because it's their data that was mined, essentially, and it's their users' data, and the users thought it was private. And the reason they thought it was private was because back in 2014 and 2015, Facebook actually settled with the FTC, the Federal Trade Commission, the Federal Communications Commission, saying that we are going to safeguard the privacy of our users. Well, that has turned out not to be the case because Cambridge Analytica had this data and it was mined, and then they used it after 2015, even though Facebook told them to stop using this data. So Facebook catching a lot of heat, the stock catching a lot of heat, and there are a lot of people, including the former founder of WhatsApp. He actually came out, and despite the fact that he was paid a large amount in Facebook stock, he actually said, "Time is up, #delete Facebook." It was trending everywhere. Interestingly, if you want to delete Facebook, you shouldn't move to Instagram because Instagram is also owned by Facebook. You should also not move to WhatsApp because WhatsApp is also owned by Facebook. But I'm not calling out Facebook here, because ultimately, I think the users must bear some responsibility in this whole debacle. Users have utilized these platforms for years for free. They don't pay, and essentially what their payment is they're giving up their data and they're surrendering some of their privacy. And that's how they're able to access these products, which cost a lot of money to build, cost a lot of R&D. Somebody's paying these Facebook employees. Somebody's making sure they're profitable. It costs a lot of money to do that. So Facebook has to get paid somehow, and they get paid because of your data as a Facebook user. So if you want to continue to use the platform for free, then there are some, common sense things that you need to be aware of. And part of that is that your private data is not private. I mean, at the very least, Facebook's using that to target ads specifically to you. And maybe you think Facebook's kind of this benevolent dictator who's going to use your data just to target the ads, but it's not going to go outside of its walled garden. And perhaps that is an assumption that you want to make. But regardless, someone's going to be using your data. And if you think Facebook is better than these other guys, I think you have probably another thing coming. So I think it's just important to be aware of what you're doing as a user, be aware of what you've done and the data that's out there, and just acknowledge that when you use these platforms, the data is not going to be private. So it's important to make sure that there's some safeguards there and you don't release everything onto the internet. So that's the call out for today. Beware of what you post on social media, and we'll catch you back here next week.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.